Good morning, everyone, and welcome to the INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Tuesday, the 6th of April. Now, in today's video, you're going to learn that there was a significant reaction to the US jobs report on Friday. US jobs growth was much higher than expected, and there was a big positive move through markets on Monday. Risk positive means that the equity markets were shooting higher. The US dollar was peaked off lower, and there's a little element of support coming in for the dollar today as a reaction on a rebound, and it'll be interesting to see how a lot of these markets respond now with the dollar having retreated as it has. Now, in terms of equity markets, they're fairly mixed US side, but European markets are playing catch up for the Easter break, and that will, I think, be a feature of today's trading. Now, in terms of data points overnight, we had the Chinese services PMI, which came in stronger than expected. We also had the Reserve Bank of Australia standing pat on interest rates. No real data of any note elsewhere, though, today. Now, don't forget, at the end of this video, there's the INFINOX support and resistance table for your levels. Okay, with regards to markets, we're looking at euro-dollar now. As I said, that dollar move that we had yesterday to the downside has allowed euro-dollar to rebounding in towards resistance area, though. So the question is this an opportunity to play that dollar positioning once more with the strengthening that has played out in recent days? And also we're looking at the gold chart. Gold has started to find an element of support. Again, it's rallying and it's in towards another resistance level. So again, key questions surrounding whether gold can continue to recover. And finally, we're looking at the US stock markets with the S&P 500 futures sharply higher in the last few days, certainly helped by that US jobs report breaking out to all-time highs. Is it a good chance to buy? I don't think that the immediate upside is great from here, but I think there's some opportunities on a correction. So let's have a look at these charts. Moving now to the INFINOX MT4 platform, and we can see, starting off with euro-dollar, that there's been a big pickup in the last few sessions where the euro-dollar has rallied from support around 117 big figure, a few positive candles there, and it's actually broken a downtrend. But essentially, this is just an unwinding move. We can still see negative configuration across momentum indicator RSI, which is just basically unwound back towards the 40 to 45 area where recently we've seen recoveries failing, and into resistance area 118.35 I think is the key area of resistance, starting to come in there to 118.70 to 118.80, 90. I think that resistance territory overhead is important because I think that rallies are still going to be seen as a chance to sell on euro dollar. Now, obviously, there is an element where the breach of the downtrend and the improvement above the moving averages, the 4-hour chart, that has helped to improve the outlook near term, but essentially I still see this as a rally that's going to be sold into, and I still think that there's further downside move on euro dollar for a stronger dollar to retest these supports, and you'd be certainly looking at 17.35 to 17 big figure likely to be tested in due course. And moving on to the gold chart, another breach of the downtrend. But it's interesting, I've been writing in recent times that I still think that there is an element of support coming in for the gold price. It had 2 sharp days of downside last week, being countered by 2 positive days of recovery in the last few days, and it's back towards that resistance band 1740 to 1760, 1765 area, and this is now question mark territory as to whether this is key crossroads, because look at the momentum again. RSI back around the 45 to 50 area. This is a really important moment for gold. If it can get through that, well, reaction high of 1755, but through 1760 area, that would really suggest that a gold recovery is potentially in motion, and at least I think a low has been seen around that 1670 area, 1675. And finally, onto the big breakout on that S&P 500 futures chart. Strong run higher in the last few sessions, really helped by a tech sector rebound as the US inflation expectations has just dropped off slightly. And we can see the big breakout above 39.80, 39.60 to 39.80, key breakout support now. That will now be the area which you'd be looking out for any corrective move to be buying into. Look at this RSI, again coming towards this area of the high 60s where these rallies have tended to default fall over recently. So is this a moment again where this rally just starts to peter out, starts to unwind, and is that then the point at which you start to look for buying opportunities around the 39.60 to 39.80 level? I think that's probably the best way to play the S&P 500, which has just hit all-time highs. Thank you very much for watching this video. I hope you found it interesting and informative. Join me again tomorrow where we'll be looking at how these markets are progressing through the week. So with that, I will leave you with the INFINOX support and resistance table, and I will speak to you again tomorrow.